see you, Nancy. Thanks for having me.
Fantastic. Good to have you. Now, let's get started. The swearing-in ceremony will be in just a few days. I would like to know what your feelings are towards the market, regarding the market, especially as the transition approaches. Are you bullish, or you are hawkish, or you're neutral?
Personally, I'm not allowed to have express an opinion or an emotion regarding that. But if you say regarding the markets, typically, empirical research has shown that every transition of government normally engenders good feelings amongst the people, feelings of positivity, positive change coming. So investors typically react to that. So my expectation is that the investors will be coming into the market with a fresher eye and with more optimism as we transition to a new government. So I will say that I'm positive that this transition by itself will be a positive move for the market.
Okay, Mr. Amolegbe, what I was actually asking was not your feeling towards this transition about the election results. What I actually wanted to know is either you're bullish, hawkish, or you're a bit neutral on the market, taking a look at what your sentiments are regarding the markets as we transition. So that was actually my question. I hope you're getting it now.
Yes, I got it now. If you put it that way, I'm positive. I will say I'm actually bullish, really, given where we're coming from. If you put together the manifestos of the incoming president and its antecedents, there's absolutely every reason for one to be bullish as to what we're looking towards in the new government, and what their policies is likely to engender for the market. So I would say that I'm bullish. I'm also perceiving that in the way the investors have been reacting in the market in the last few days. So all in all, everything seems to be looking good. So so I would say on the balance of things, I'm bullish at the moment.
Okay. This bullishness sentiment which you have, is that also what your colleagues feel like? Is that how your colleagues and how the markets generally are feeling like as we transit in just a few days?
If you read the market data in the last few days, you could guess the feeling, the general feeling of market operators and investors alike. Because I was looking at some of the data you show from African countries and some of the other European and Asian markets in the last few days, and I see that most of them are in the red. But if you look at the Nigerian market in the last few days, we've actually been in the green, and we've been green consistently for the last few days, which shows that despite the fact that the global economy isn't doing as well, the feeling and the attitude in Nigeria seems to be a little bit different, and I would like that is as a result of the transition we're looking towards. So other than other factors that you could look at globally. So I'm positive, and I feel that my colleagues, the other operators, are also positive, and the investors seems to be reflecting that in the way they are pricing shares and equities in the marketplace. And that's why we're green.
How much of that greenness is also coming from the fact that we are just also winding down an earnings season, and many companies quoted on the exchange did come up with good revenue, translating into good profits, translating also into a good dividend payouts, seemingly to investors. So how much of this bullish mood is also being hinged on that in terms of the positive closes that we've seen in a few days concerning the stock market?
Well, I would not rule out totally the positive earnings report and the declaration of dividends as a contributory factor to the positive sentiment we are seeing in the market right now. But you will agree with me that the stock market is a forward pricing mechanism, so to say. So I will say that a significant portion of the positive of the sentiment from positive corporate announcements have probably already been factored. So what we're probably seeing now is optimism towards the future more than what has already passed. All right. A lot of those companies you've also mentioned have also come out with first quarter earnings, very good first quarter earnings. The expectation is that will continue into the near future, and that is why we're seeing the positive sentiments we're seeing at the moment. So, given that the stock market tends to look forward as different from factoring what has already passed. I think the bulk of what we are seeing in the market right now is coming from what we're expecting rather than what has passed.
Okay. I appreciate your positive outlook for the market, but it's a market and anything can happen. A policy of pronouncement can actually jolt the market in any way. So if I really want to get your cautious sentiment, which segment of the market do you think that investors should be cautious about as we transition? I hope you understand my question. Which segment of the market should we be cautious about? And which segment of the market should we also look at that bright things are going to be for that segment? I hope you understand what I'm asking.
Yeah. I mean, I get you to an extent. The government we're seeing and from their manifesto are probably going to focus on infrastructure. The outgoing government have done quite a bit of that. We think that the incoming government will also focus on developing infrastructure because at the end of the day, you need to develop infrastructure before you can talk about transitioning from consumption to production. So, as a stockbroker, I will continue to be bullish on sectors around industrial goods, around construction, around those businesses that has to do with developing infrastructure. We also know, of course, that Nigeria is a huge market for telecoms. So that the growth in that particular sector is not expected to slow down anytime from now. The banking industry also continue to show resilience. I was mentioning to someone that if you look at what our banks have done recently, a lot of them have had to take significant hits from having to take write-off from what is happening in Ghana. And despite that, most of them came up with very good numbers in the year-end results and declared even dividends that are better than what they declared last year. That for me shows resilience in that sector. That shows a sector that is growing despite all the challenges that are available in the market. Regarding caution, we're still grappling. Obviously, we're still grappling with the issues of inflation. We're still grappling with the unstable exchange rate policy. So I will say those industries that lean heavily on consumer goods that finds it difficult to pass along inflation cost to their customers, then those ones might continue to struggle on the short run until we actually start seeing the policies that the new government is going to come up with to tackle those issues of inflation and foreign exchange issues. So I will say On the cautious side, I will be cautious about consumer good companies, that really are not able to really pass on the full cost of inflation and exchanges issues to their customers.
Okay, so from that answer, you definitely understood my question. Now, let's take a look at what you just said in terms of the segments of the market where you are optimistic about. Industrial goods, isn't it? Did I get you well? Yes. Do you think? Yes. Do you think that inflation will not pass through those segments of the market also? And how will inflation pass through? Because inflation is impacting on everyone as we speak right now. For some segments of the market, like consumer goods, which you're talking about, a lot of the companies there have increased the prices of their products and all of that. So based on that, your optimism for industrial goods and the other segments which you talked about, do you think they are not suffering inflation too? If you think so, how is inflation passing through?
Okay, now the industrial, all the sectors are suffering the impact of inflation. I mean, that is the way it works. It's just that, by the structure of each economy, some industries and some businesses are able to handle the impact of inflation better. Maybe because of the focus of government, or by just the nature of the product that they sell. All right. So, for instance, if I mentioned industrial goods, let's use cement as an example. All right. I mean, inflation has impacted that sector, but they're able to pass on the impact of inflation better because they're able to increase their product, and despite increase the price of their product, and despite increasing the price of their product, we are not seeing that increase in price impacting volume that much. All right, from the figures we're seeing. As different from, maybe the consumer goods where a significant increase in prices would actually impact the volumes that the companies are able to push out, which could ultimately impact their total revenue and, of course, their profits at the end of the day. So, industries that are set products that have essentially inelastic demand. I mean, we're still in a growing economy. We've mentioned that the need for infrastructure is enormous in this country. So even if the price of cement, for instance, was to rise, that really won't stop people from continuing to build and continue to build and continue to develop infrastructure. So, I mean, so it depends on the industry, it depends on the products. And then, the willingness on the market to absorb the cost of inflation for those products.
Part of also why I asked that question, and I like that you brought in the consumer goods segment of it, because there's also a major player, and for the purpose of this interview, I need to call names so that our viewers would understand. We're talking companies now that are listed, quoted on the exchange. Unilever, for example, I think in March, did say that it was stopping the production of popular brands that Nigerians are used to, home care brands as well as skincare brands. The popular Omo, for example, Lux, and which other one? Sunlight. So why I'm bringing this up is that in case Nigerians go to the markets and they are looking for those products, Unilever says that it is stopping the production of those products, and it said that in March, in a big perhaps naira devaluation and some of those challenges that we're talking about, inflation eating into the bottom line. Unilever says that it wants to, restrategize, remodel its business to sustain profitability. So, for that case, for Unilever, for example, and perhaps for even other consumer goods products companies, what are the risks?
Okay. Of course, the risk is part of some of the things we've mentioned, some of the macroeconomic risk and some of the things, forex issues, inflation issues, interest rate issues, and then you have a situation where, consumers now start trading down. all right, when they cannot afford the price increases on some of these products that some of these companies produce, our consumers could very well start trading down. And the moment they start doing that, then you are now seeing a situation where volume starts to dwindle. So it takes for some of these companies to really be innovative in order to be able to remain relevant in the marketplace.
Okay, Mr. Amolegbe, let's quickly take a break, and when we return from the break, we'll continue this conversation. But as we take a break, we're going right now for a live broadcast. But don't fret, we'll bring you back this interview.
Even while he was governor of Lagos, various market positive initiatives came from his cabinet. So we expect for him to to be pro-market on a general basis. Now, as I've mentioned, obviously, he's going to need to finance his programs and his initiatives and his policies. And, it's not like, the predecessor is leaving a pot full of money for him to execute that. So the expectation is that he will lean on various sources of revenue to be able to execute those policies. We expect that he looks positively at the market in order to do that. And he has very good understanding of how to go about that, and the capacity of the market to assist in helping to raise the required funding for most of these programs. So, and if we look at also most of the people that are around him, at least the few people that we know that are around him, most of them are pro-market people. Some of them are even, were even players in this market before they went into government. So we are not expecting them to change their color. We expect them to still continue to be pro-market. One of the things we as market operators expect to happen very quickly is the acceleration of the privatization program that seems to have been stalled. We know that is what needs to happen. Government just needs to answer off a lot of these, public companies, bring them to the market, sell them to the public, raise the required revenue, and see the efficiencies that come from them being run by private enterprise. So we expect that to happen very quickly. I also suspect that there will be increased capital raising from the fixed income end of the market, at least on the short to the medium run, before other policies now come in to improve government revenue. So the expectation is that the equities market and will benefit from privatization, while we also see increased entry by government into the fixed income market.
Okay, before I come to fixed income market, because of our 5 minutes today, you were the immediate past president of the Chartered Institute of Stockbrokers. I'm actually curious to know what the association of the body is doing to bring in new blood, to bring in the young people to begin to invest in the capital market. I asked that question. I also asked the same question from SEC a few months ago. But as an operator, are you also worried that the market is aging, or even aged, as it were? And what are you people going to do to bring in freshness? Young people, Nigeria's demography made up of young people. What are you people going to do? Do you think that this new wave, or the new government that will be in place in a few days' time, what can you also do with them to bring this kind of newness into the market?
In truth, we've seen an increase in participation by younger people in the market recently. And by recently I mean in the last few years. With the transitioning of the market itself from the physical, paper market to the electronic market, we're seeing more of them being able to access the market via their phones and other devices. also, we see that we know that there's a transition period. We know that the young or the younger that tends to be they tend to be I would say impatient when it comes to income. So you see most of them firstly tending towards non-traditional investment sources, and you know what I mean by non-traditional investment sources. But with time, with time, they are realizing that those non-traditional investment sources are just too risky. Some of them are finding themselves losing the small savings they have, and they are now taking a look at the stock market, the fixed income market, to say, okay, look, is this a place where I can build, I can build long term accumulation to be able to execute some of the projects I might have in mind. So gradually, we're seeing more of them coming in. The advent of these digital platforms that also provides access to markets not only in Nigeria but in foreign markets is also helping, because it means that it's meeting the youth where they are. So even we have lots of Nigerian youths that are not necessarily living in Nigeria, but would like to not only invest in Nigerian market but in global markets. So the admission of the digital platforms by SEC recently is also helping to serve as a calling card to some of our youths to to start to participate in the marketplace. On the CIS side, as I've mentioned on your program earlier, we've also transitioned from bringing in young professionals into our fold by having them do physical exams. So our examinations, for instance, now are also fully digital. So irrespective of where you are in the world, you could take your exams and qualify as a stockbroker in Nigeria. So a lot of these changes are coming in, and I think that we'll start feeling the impact of those changes significantly in the next few years.
Okay. I want to say thank you very much for joining me on the show today. Let's do this again sometime, perhaps when the president-elect is inaugurated and we'll begin to count down to 100 days. Let's see what will happen. But from what you've said, markets are really hopeful and optimistic that as a pro market per se, good things will come to the marketplace. So thank you very much, Mr. Molegbe, for joining us today.
Thank you, Nancy. Thanks for having me.